Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, January 30th, 5 o'clock p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend going back to the first 2 days of November when we had consecutive follow-through days on the S&P 500 and NASDAQ 100. You can see the trend gauge over here. 4 green arrows is what we always want to see, and that's what we're getting. Implies market leadership acting bullishly, and then all 5 of the major indexes are trending above the 3 timeframes that we track, that being the short-term 21-day moving average, the medium-term 50-day moving average, the long-term 200-day moving average. So what happened today? Well, we're kind of waiting on the FOMC announcement tomorrow from Fed Chair Powell. There's virtual lock that they're not going to do anything to interest rates. So it's really going to be the tone of the statement, his introduction, and then the press conference. And then for the open, there's more info that comes out on the QRA. That's the quarterly refunding announcement that will discuss the denominations of bonds and bills that the Treasury will issue to cover the debt that has the potential to impact markets as well. So what happened today? All day tight waiting on that news tomorrow. Tech lagged today as there were a lot of tech earnings after hours. And right now, none of them looking very good. We'll get into them when we get into the charts. Here are the numbers on the day. The Big 7 down an average of just about 1%. RG8 taking a break, down 0.7. S&P 500 opened down 0.1%, traded in a very tight range all day and basically closed where it opened. RSP slightly positive. That's the equal weight. NASDAQ 100 down 0.7. Equal weight. NASDAQ 100 down 0.6. Dow, the lone bright spot, finishing positive by 0.35%. Mid caps down 0.2. Russell 2000 small caps down 0.76. Global 60/40 down 0.07. In-house GROTECTION down 0.25%. Let's get into the charts, then the tail of tape, and then we'll wrap it up. We'll start off with the NASDAQ 100 here. You can see after hours down 0.67%. Not really a big deal. Still just below, actually, now the 8-day exponential moving average, if that holds. And we're down because AMD is down about 3%, Google's down about 4%, Microsoft's down about 1% after hours, and that's hitting that index, as those are pretty big components there. But really all we're doing is going in a 5-day tight range. We probably will break one way or the other depending on the QRA and FOMC tomorrow. Let's go to the S&P 500. Traded very tight today, less than 1/3%, just hanging out near the top of yesterday's range. Let's go to the Dow, which made a new high, new closing high. 38,467, up 0.35%. Mid caps still inside this 7-day range now, but above the 8 and 21, so that's good. IWM tried to break out of this range yesterday, pulled back into it today, down 0.85%. The dollar didn't do a whole lot today, traded in a tight range, down 0.20%. How did that translate over to gold? Gold slightly positive, gold stocks down 0.74%. The VIX traded tight, finished at the lows of the day, basically sitting right on the 21 and 50-day moving averages. Bitcoin trying to bust higher after taking out and having an ugly sell-off after the introduction of Bitcoin ETF, but now up for the 5th straight day, up 0.86% today. Let's flip over to bonds. Broad bond index up today 0.18%. The big move was in TLT, which was up 0.91%. That meaning interest rate, long-term rates drop lower. Here's the TYX down 1.3%. The 10-year, the TNX down 0.78%. So rates pulling back going into the FOMC tomorrow. That's our inter-asset correlation. Let's go to the tail of the tape. One good sign for bulls is that the NASDAQ McClellan Summation Index, RSI, they both hooked up right above sold. So we didn't break down into oversold, and now we hooked up. This is normally a tailwind for stocks. This is something we'll be keeping an eye on, but again, it is a secondary indicator. Some economic data that came in today. JOLTS, job openings above expectations, consumer confidence also above expectations. Up 7 of the last 9 days on the S&P, 9 days above the 8-day exponential moving average, 7 days above the 21-day. From a sector standpoint, uranium, ITB with a good reaction to Pulte. ITB was up today, 0.5%. NRGU, some news here. We were split on oil names. Saudi Aramco said that they were stopping all of their expansion projects, and that hit OIH, oil services stocks, hit it hard. OIH down 2.4% on the day. It was down 5% at one point during the day, rallied back a little bit. But that should tighten the oil supply, and the net result was that oil was up, and a lot of the big oil stocks were up as well. NRGU, we took a position in this today. That was up 6.1%. Basic materials, financials, and staples, the other standouts. XLC and XLK, tech-related and semiconductors, taking a break on the day. As I said, the only portfolio change, our buy of NRGU, raising our exposure from 1.80 to 1.85. So the bottom line on the day, all-day tight range, less than 1/3%. QRA, FOMC on deck. Tech lagged today. Tech lagging, as I said again, after hours on those 3 earnings reports that things could change. The AMD conference call is probably just getting started right about now. It was below 160 at one point. It was above 174 at one point. So a lot of volatility. We'll see how that shakes out. So let's take a look at a few charts. Let's follow up on what SMCI reported yesterday. They initially gapped up quite a bit near the 550 level, but that put in a top immediately, and it sold off in the first 30 minutes and then kind of worked its way sideways. You have to see how this acts the next couple of days, see if it can hold that Livermore 500 level, but a big move from 360 up to 560 before giving some back today. So definitely something to keep an eye on. And that's really about all that stood out today, besides a few oils. The big oil that stood out to me, biggest of the Big Ten, and they're in the NRGU, was Marathon Petroleum, with a big breakout on almost double average volume, up 6.1% above this 160 resistance level. Some of the big leaders that had nice days yesterday gave some of it back today. Airbnb, nice day, nice couple of days. Still can't stay above that 150 level, down about 2%. Let's see what else. Some other data center related stocks had good days. VRT, would be on the SMCI earnings report. VRT up. Another one is Dell. Dell up as well, although it finished near the bottom of the range. In-house, we had CrowdStrike make another high above the 300 level, back below it after hours. Let's see what else. I think that'll be about it. A lot of tight trading today, as I said, waiting on the Fed. So let's go ahead and wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you'd like to become a client, email my partner, Dan Stewart, and he'll get the onboarding process ready. That's dan@revereasset.com. Our flagship portfolio is named GROTECTION because it serves a dual purpose. We grow assets during market uptrends, and here's the bear market. We protect them during downtrends. This is the 2022 bear market. We lost significantly less than the market, turned to participate in this uptrend, got more defensive when we sold back off. But since November 1st and the follow-through day, we've been riding this wave. You never know how high it's going to go or how long it's going to last. I mean, look at this move up all throughout 2020 and 2021. But in early 2021, growth stocks kind of took a hit, but that didn't stop the indexes. That's why we invest in both the indexes as well as individual leading growth names. And if you think an approach like this makes sense, by all means, reach out to us. We appreciate everybody liking our content and subscribing on YouTube. and a lot of nice comments last night. But I do, before we wrap up, want to talk about AMD sizing. I want to follow up on what I did today. And this is a kind of a spreadsheet that I use for all stocks that we own that are going into earnings. So we have been reducing our AMD position. We were down to 2.5% size going into earnings. So what you do is on Thinkorswim, there's an estimated move for every stock that's reported earnings. We take a look at what that move is and we multiply it by 2 to come up with a worst case scenario. So when I did this afternoon, AMD was trading at 177. The expected move was 1525. That's 8.6%. To the downside, 2 times that move would be $30.50, or taking the stock down to 146.90, that would be a 17.2% loss. We want to lose no more than 1% of our overall portfolio on any earnings blow up. That's our risk control process. So on the size that we had going in, we would lose 0.43%. So the max size that could be permitted was 5.82%. So you see, there's some examples in here. It's not until you get to 6% that we would have gotten the signal to reduce going into earnings, because we would have had more than 1% at risk. So if you have any other further questions about that, by all means, reach out to me. We answer all comments on YouTube and emails. And with that, I'll wrap up the video for Tuesday, January 30th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.